Today, we are going to talk about the subject of sales tax for SaaS and the challenges that companies have. We all talk to companies all the time that have these challenges, right? They're high growth, they're selling in the US, they're selling globally, and they need to get their arms around tax compliance. We at Zamp have this same issue, right, as a SaaS company. And so it's something a challenge that is, really connected to us in terms of things that we have to do every day in terms of a company as we grow. And we're going to cover just some things like to help you understand challenges, pitfalls to avoid, things like that on this session. We've got a really great panel here as well with us. So I'll go through the panel that we have. Go back there. We'll cover also Nexus and software SaaS taxability. We'll cover that session. We'll do a roundtable. So we just want to make this very informal. So we're just going to have a chat, talk about some things, common things that we're seeing, and then we'll do a Q&A at the end of the session. So our panel here, we've got some really great people. So Pritesh Badiani, he's 20 plus years in sales tax. He's the global indirect sales tax lead for OpenAI. John Wilson, 6 years in the sales tax space. He's an account executive at Stripe. Nicole Power, she's a head of filing at Zamp. 18 years of experience in the sales tax space. She's also been a state auditor, which is going to be great to get some of her feedback there. And then John Wintermeyer. We're going to call John Jonathan, though, for this session because there's a John W., John Wilson. We don't want to get them confused. So Jonathan Wintermeyer, who I usually call John, he's a solutions architect at Stripe. He has about 8 years of sales tax experience. I've been in the space for about 12 years as well. So I think collectively we have over 64, 65 years of sales tax experience here. We are the kind of people that on the weekend, we go out over, have a pint, and we'll talk sales tax. I mean, that's we are sales tax nerds here on this session. So first, I just want to cover, we're not going to do many slides. We're going to have a couple slides, but I want to cover a couple of the key things that we hear about. You're a SaaS company, right? Where do I have to collect? And Nexus is something that is a question that comes up all the time. So there are two components to it, right? One is physical. Everyone gets focused on the economic, but you have to remember physical is important as well. So where you have offices, employees, also as a SaaS company, you may have resellers or 1099 employees that are reselling your product, you're commissioning. That can trigger Nexus. Or you may go on site to provide training to companies, some of your customers, right? That also is a Nexus triggering event. So it's really important to understand this. I highlighted employees in the state, though, because we live in a distributed world, right? You're hiring people from all over the country. And that is something that sometimes companies miss. And just to give you an example, at Zamp, we had a situation where we had an employee move from Wisconsin to New York, and sales tax is taxable, SaaS is taxable in New York. So we were in a situation where we didn't know they moved. It was not communicated around. So we were like, oh gosh, we got to go out there and we got to register. So we were a little bit late on that New York registration. Hopefully there's no New York auditors on the call here. But we were a little bit late on that. So you have to be tracking that. The other piece is economic, tied to either order volume, revenue. There's different timelines, trailing 12 months, current calendar year, previous calendar year. The states all have different rules. Let's just jump into the next slide here, which will show specifically, how that varies, right? So there's 21 states that currently have a trigger plus DC for 100K or 200 orders, whichever happens first. And so what's interesting when we talk to SaaS companies is, hey, try to get as many annual deals as you can, because if you go monthly billing, that's going to increase your order rate. You're going to trigger that order threshold first. So it's nice to get those annual orders because that's one order versus 12 as a monthly billing. So that's going to help you there. But there's some states that just look at revenue. There are some states, California, Texas, New York, have 500,000 as the threshold. New York has also and the 100 order component, but it varies across all these states. So it's something though that's important that you're tracking this. Again, as a software company, you're growing fast, you're experiencing this. This is something you need to be, have a gauge in terms of where you sit. Let's just jump into taxability real quick. This is also another pain point that we hear about all the time. So when you think about software taxability, right, you can think about it in terms of a couple of components. How do you define your software, right? One, you could look at the function, right? Is it just data access? Is there various functions that you're providing within the service? Maybe it's accounting function or order to cash function, whatever that is. What are the functions that it's providing can be an important component. In other words, another one is how it's delivered. Is it SaaS, digitally downloaded? Is it streamed, right? I didn't include physical media in there because I think it's going extinct, but I still have some physical media. But the point is how it's delivered can matter. And then the access rights, and this is really important when it gets into streaming, is it temporary access, it permanent access? That can impact how the states define your product in terms of ensuring that you have the right taxability or tax code that you map at the product level. And just diving a little bit into SaaS, there's 20 plus states that tax SaaS today. I think it's like 23 or so, give or take. I will say when I started in sales tax back in 2010, I think there were like five or six. So the states were still trying to figure out what the cloud was back then in SaaS, but they started, coming along. So they're adding more states all the time. Vermont just came on this year and started taxing SaaS as of July. There are also some differences. For example, B2B and B2C. Maryland is an example of a state that exempts B2B but taxes SaaS B2C. There's also states where SaaS is exempt, but the home rule locals tax it. So Colorado is an example. At the state level, Colorado is exempt from sales tax, but the home rule locations, the 63 home rules, have the ability to tax it, and some of them do. There's different overrides. So Texas applies an 80% base override, meaning the sales tax rate in Texas is applied to 80% of the base amount of the order. Connecticut has just a flat rate override of 1%. Another component is if you don't have nexus in a state, but the SaaS is taxable, your customers have to declare use tax. And then we talked about the changes, right? It's changing all the time. I want to go back to, though, on the, defining the product, because this is just a good example. When you think about, thank you. When you think about defining the product, we had a customer last year we were working with who came to us and said, hey, we sell software as a service, which they did, but they also were combining digital content with their SaaS. So they were including streaming music, they were streaming content, video, pricing promotions, and so on within their software. So we did an analysis of them, and they get on the phone with us and they said, hey, you say our software is taxable in North Carolina. Well, North Carolina is exempt for SaaS. But the minute you tie digital content to your software, it becomes taxable in North Carolina. So that was like one of those aha moments of like, oh my God, like we have to know not only are we delivered as SaaS, but also the function our software provides. So I think let's get into a Q&A here. And I want to cut over and start with Pritesh here. Obviously the growth of OpenAI is well documented, right? You guys have explosive growth, but with that comes a lot of challenges. I'd love to hear more about, your story on the transactional tax side, and really how you managed to bring it all together, right? Some of the learnings, and challenges that you faced along the way.
Yeah, sure. So, sorry, we started with a taxability review. So that was to review, understand our products and review what the tax rate, if there is any, in each of the states, and then obviously rolled that out globally. And then from there, once we selected a tax calculation partner, Stripe in this case, we worked out which kind of states we needed to register in straight away, which was quite a lot based on the taxability of the product. And then
Yep.
from there, we focused on A, calculating taxes correctly, setting all that up in Stripe, and B, how do we report all of this? So each state, some are more difficult than others, as you know. Each state has different strenuous reporting requirements. Some are really hard. So we worked a lot with Stripe to kind of custom build reports, I suppose, that came out of Stripe tax transactions. And each state had slightly different reporting requirements or what you would include on the actual filing. So from there, in order to be compliant, we knew we were collecting the right tax. Stripe was calculating the tax for us. And then from there, it was how do we report this? How do we include all the figures in each state's returns in all the boxes? So we worked closely and partnered with Stripe to actually get all those details in those reports and their state level reports. And then it was the next kind of phase of that, I suppose, was we know we're growing and will continue to grow. So we need to kind of be able to scale a lot of this so that we don't end up in a situation where the data is too large to do anything with. And then secondly, kind of the next stage on what we're working with Stripe on is to be able to somehow automate the filings. So apply certain controls, checks and balances to the numbers, reconciliations, etc., but have like Stripe or a tax engine partner enabled to actually file and, fingers crossed, remit our taxes to each state.
Yeah, that's great. And then also from a global perspective, obviously you guys were set, you're getting purchased globally, your software, and a lot of growth there. How do you kind of see that in terms of going after and supporting kind of a global tax approach?
So the priority is to manage risk and make sure that, there's no big holes. So kind of working backwards and like partnering a lot with our revenue teams across OpenAI, but it's kind of estimating what your tax is at pretty much at country level, and then prioritizing having a phased approach and like prioritizing the countries where you do need to register and start collecting taxes in, and then hoping that those countries are tax enabled, can collect taxes in your tax engine, which we've had for the most part with Stripe. And then it's a case of, again, going back to reporting, etc. I think what I've seen is generally on the international side, the reporting is less specific, let me say, than probably
Yeah.
US.
Yeah.
They kind of just want global or country level numbers, not by zip code or anything like that. So yeah, it's again partnering with your tax engine provider, creating the right reports, reconciliations, etc., and then having a filing process ready. And then each country has like very specific nuances, which you've kind of got to get your head around, and being able to scale and have that phased approach.
Yeah, I think and having that strong partnership is key. I love the way you talk to that, because that becomes important. It's not just technology; it's also having that partnership, with the provider that can kind of help you as you grow. One thing also, you mentioned reconciliation, right? And I think about like your sheer volume of orders, your average sales size, the amount of revenue you're doing, the projected growth. Think about that from like a systems perspective, from a sales tax perspective. It's enough to kind of make you want to just like, I guess, lay down on the couch and go to sleep for a while. I don't know. I mean, where are you at with like all the sheer volume and managing all of that from a tax and systems perspective?
I think what I've found is like there's this great product out there that can streamline processes, etc. It's called ChatGPT, and it's actually been like a godsend. Not just saying that, to like help with kind of streamlining processes or finding more efficient ways of analyzing data, that sort of stuff. Even like semi-automating a lot of time-consuming processes. So I've personally, a lot of people here actually have leveraged that.
Yeah, that's great. I appreciate that feedback. That's great. So Nicole, I want to go to you now. Just the elephant in the room here. Thanks, Pritesh. So I talked about Vermont, and obviously sales tax is exempt still in roughly half the country, give or take. What's the current legislative path there for states? Like, what are you seeing or hearing on your side in terms of SaaS and the taxability of it going forward from a legislative perspective?
I think that even before Wayfair happened, right, there was this conversation around the increase in sales of digital goods and the policies written around the taxation of those products, right? And the main issue around that legislation is that it was written before the products that currently exist ever came about, right? So we're in a situation where the states are trying to catch up to technology, and they are trying to figure out what's the definition of a digital good, what's the taxation around that, and how do we tax these things moving forward and kind of keep up with technology that is happening as they're trying to draw up the laws. The thing that occurs is that when those laws come into effect, it becomes overly burdensome for the taxpayer, right? So they're required to know when a law changes, be able to interpret that law, and then timely and accurately put those things into effect, the taxability into effect. And they are legally required to do that. And ignorance of changes in the law or inaccuracy of enacting those changes are never an excuse as far as the states are concerned. And what the states do is they enact these laws, and the definition of what a digital good is different in every single state, but you're still required to know what those laws are, right? So because you're good at selling your ebook and you're selling it in every single state, you're also required to know what those laws are for taxability in those states. You know, best case scenario for people that are selling these type of products, if the states could get together and just have one uniform definition of what a digital good is. But that's also like trying to get 46 people to decide where to go to dinner. It's never going to happen, right?
Yeah, the states get together. Wow, that would be, imagine that happening, right?
Well, I mean, there are some committees like the Multi-State Tax Commission that have been having this conversation since I think like 2020, 2021, right? Where they try to get the states together and they have these conversations about having a single definition. And taxpayers would be very happy if we could all decide on what that definition can be, because there is a clear liability to a business for getting it wrong.
Yeah, there is. Yeah, absolutely. But I think about states like California. I mean, how much money are they leaving on the table not taxing digital goods and SaaS? I know there's probably some lobbyists going on there, but in terms of trying to keep it exempt, but imagine the amount of money that they're leaving on the table. I wonder, is that a state that's going to eventually move towards taxation of digital goods?
I think everybody's going to do it eventually. Yeah. I think they're just trying to get all their ducks in a row. Yeah. I think that the problem becomes, what's the definition, right? Because you see these people that are coming out, and you see these states coming out with new legislation, but they only give you examples of what those products could be, because they don't know exactly what's out there. And I think that they just have to take their time and wrap their head around it. Like, I don't think that taxpayers are angry that they're changing the law. It's just how burdensome it is and how unclear it is, for us to understand what it means to comply.
Yeah. So let's stay on that topic. So I talked about the whole SaaS taxability thing and, defining your product and everything. John W., like, what can a company do to ensure that they're mapping the right tax code to at the product level to make sure it's supporting the correct exemptions or partial exemptions, of the product or service they're selling?
Yeah, good question, Matt. So Stripe Tax, where we operate here, is we are a tax automation solution, and really a phase one approach here to get things right and off on the right foot is, like you're saying, aligning the products that you provide with tax content that's going to determine taxability. So we have our product tax codes, and that's the tax content that's going to drive taxability within our engine. Those are always growing and evolving, as Nicole alluded to, as there's changes in legislation around software and how it's taxed and how it will be taxed in the future. We make those updates on our end. When it comes to software, to give some examples, we have software codes for personal use, business use, custom software that can be taxed differently, as well as downloadable, amongst many other things. So in working with folks to help them stay compliant, number one, all of our product tax codes are totally publicly available to see the products that we support. And I think the thing that I would call out here is tax codes are typically created for us when a certain product that our users provide has some unique type of taxability against other products that we've supported previously. So first, users can take a look and say, hey, here are the products that I think align, or the codes that I think align with our products and services. If there's need to dive in deeper to those to understand how these products will be taxed in different states or across the world, we can work with our users to give them guidance around how we're going to treat that tax determination. And ultimately, they can measure that against their own review or the review of any tax partner they work with. So I think our big goal is to give our users choices based on the content we have, so they feel they can be compliant as possible in setting up a tax engine and tax automation solution.
Yeah, it's pretty cool. You work with a lot of disruptive companies too. Like, sometimes I imagine you're talking to companies like, wait, how would we define that service? Because they're like, we're doing the, and basically creating new markets, right? So I know Stripe works with a lot of companies that do that. So I'm sure it's a real challenge, but it's great that you provide that support on that side. Nicole, going back to you, John's defined the product. We use Stripe. We want to mention that, and we define it as SaaS, right? Now, some states are exempt on SaaS, like we talked about. If we've triggered nexus in that state, and it's SaaS is exempt, should we still register there?
Well, I'm going to give you my favorite answer, and one you don't like. It depends, right?
Okay, no, it's a good answer.
Well, it goes back to the way that legislation is written and the way that definitions are written. So, when Wayfair happened, all the states got to decide what the nexus triggers were for them and what were included into those sales to trigger nexus. So when, in one state, the definition of what's included in gross can be different than what's in another state, right? So in one state, you could have taxable and non-taxable sales be included in gross, which goes against your nexus, right? And in a different state, they can say, nah, I don't want to see any of the non-taxable sales. Don't include that in your nexus. So you really have to go back and read that legislation and know what the rules are that you have to apply your nexus to.
Right. But then just say you have triggered nexus in the state and SaaS is exempt. And this is coming from somebody I sat in high school, kind of middle back of the classroom. So I was kind of back there. I wasn't in the front, taking copious notes. I was kind of middle back. And my position has always been I look at it as if I was a SaaS company and I triggered nexus in California, I might say, is everything going to be a $0 return? Do I worry about registering there? Right?
You do have to worry, because if those sales are included in gross, even if you're filing a 0 return, you have to let the state know that you've sold in that state, right? So you could have gross sales equaling $5,000, and then you take it out in deductions, they still want to know about it. So you still have to register.
Yeah. No, it's good feedback. I think also if they do eventually start taxing it, like Vermont did, you're already set up, right? Which is nice as well. So that's a good thing. Yeah, I like that. Any other thoughts on that?
No, I would just say that, when we're talking about that, we're talking about just economic nexus, right?
Yeah.
But registering in the state goes back to one of the first slides you showed, where there's a whole nother aspect to it, which is that physical nexus aspect. And you have to be aware of when you're really triggering nexus in a state.
Yeah, awesome. Gonna turn courses here. Let's go international. So Pritesh talked about Jonathan Wintermeyer, Jonathan W. He talked about, hey, we're selling all over the world. What do we need to start thinking about as a software SaaS company who's starting to sell overseas? Like, how do we ensure that we're compliant? Like, what do we need to be thinking about there?
Yeah, no, that's a good one. And I will say, just working at Stripe, right? Working with a lot of different users on where they sell, and they start in the US, and then all of a sudden they're starting to sell in Europe, starting to sell in the APAC region as well. So I really liked what Pritesh said on the phased approach. Worked with a lot of different users on, hey, we need to register everywhere. It's like, well, hey, let's like really think about it. You don't want to register in all 200 countries, and before you know it, all you're doing is pretty much filing returns in all those different countries. And so what you really want to do is, I always look at the first approach is work with the platform you're on, right? Because the platform you're selling on is typically selling or supporting users that are similar to you, right? They're selling SaaS. And so you're not the first user ever to have to calculate tax internationally. And so they should have helped other users solve that problem. And so starting with your platform, I think, is a great place to start, and just reach out to them and be like, hey, what are some solutions out there that can meet my needs on where I need to calculate tax? And I think going with that approach is you should be connected with different compliance providers. And I really recommend looking at multiple compliance providers and finding the one that's going to work best for your use case, and making sure that, hey, this is going to solve my needs. And so when you're talking with that partner that can help calculate tax for you and help calculate tax outside the US, it's really, then you're going to have more clarity on kind of what you need. Hey, what is table stakes? What's nice to have? And then I think the biggest thing too is what's going to be flexible going forward. So making sure, hey, can it support me today, but can I align with our marketing and sales team on where we're going to be growing next, to make sure that compliance isn't going to be a revenue blocker. We really look at compliance as a way to, one, obviously be compliant, but also a way to easily unlock doors to sell new countries. Because the conversations I've been a part of on accounting teams is and finance teams is sometimes you can be like the last to know about stuff. So just making sure like you're kind of bugging them and saying, hey, like where are we trying to sell next? Because you don't want to be the stick in the mud to say, hey, we probably shouldn't sell in that market due to the risk of it. And then it's calculated risk too, right? When you're figuring out on that phased approach, should you focus on a country that you have, $100 in sales, or should you focus on a country that has $2 million in sales, right? That's obviously a big comparison, but that's what I always say with that phased approach is, hey, let's start and knock down, get these big wins, get comfortable with that process of one, the vendor you're going to use, the calculation, and then just all roads lead to reporting. You can't, don't collect tax and not report it. So let's make sure when you're calculating it, you have a way to actually file it and report it to that country in an easy way. And I really lean into working with a tech partner and also a tax consultant in these different markets. It's not easy. My German's not good. So if I have to register in Germany, it's going to be a minute. Maybe ChatGPT could help me. But I think it's really right relying on partners to help you, because you don't want to focus on building a tax compliance solution. You want to focus on selling your product, and you can do that with the help of partners.
Yeah, that's great feedback. It is very much about, hey, we want to open up borders, right? We want to be able to sell to these countries, but looking at that from that approach makes sense. And I don't know, how is your German, by the way? Do you?
Yeah, if you're gonna hire me to register for you, it's gonna be a minute. 2027 it might be when the registration might be done.
Oh man. Okay, so now I want to go to John W here, because this is like the question, you get when you're talking to the accounting manager, bookkeeper, controller, hey, John, we take a lot of orders, right? And we get a high volume, but we also get cancellations, and we have to avoid those orders. And the order may occur in March, but then we get it canceled in May or June. How can we make sure, one, as part of the refund process, we're also we're able to collect back or get back that sales tax liability that we already paid the state? So what do you think about that when you get into conversations with them?
Yeah, that's a good point. So I want to jump in a little bit before the last part about actually remitting with the state, because I think that is when this becomes more of a tricky situation. It's the one that probably comes up more and more. But just to give an idea, like in a situation where you're working with a customer and they're refunding an order, or they're canceling an order, the way that we operate is that while we help from a calculation standpoint, we also want to help simplify the filing process. So a standard thing is a total tax reported report. Number one is when a refund happens or a cancellation happens, we're going to decrease the balance of that total tax reported. So ideal world, this is before you've ever gotten to filing. Let's say this tax collected here was $10 to make it simple. Now, if you've refunded that order, that balance of total tax reported would come down $10. Again, that's the easy situation. I know the bigger one here is if we've already filed. What you would have to do in this situation is working with the team who handles filing and remitting, if it's an in-house team or your filing partner, to align with the state. But oftentimes states provide some opportunity to offer a credit on sales tax filed in case of a refund. Some states have time limits when it comes to this process, but there is some avenue to remedy the situation if you've run into a scenario where we filed and remitted on orders that now have been canceled and refunded. So we try to help when it comes to your reporting in software component, but there's some additional steps to take when you actually need to go collect revenue that's already been filed with the state.
Yeah, totally. And I think it gets, when you think about like returns that occur within this, you take the order in the current filing period and the return occurs in that same filing period, that's an easy offset. But when it's from a prior period return, then you need to be looking at how do we apply that. Now, some states would say you need to do an amended return. Well, that's like probably one of the biggest nightmares you could ever get into, amended returns. No one likes doing those. So almost thinking about providing that offset in the current period, right? Being able to provide that offset in the current period is something that a lot of customers look at. One other question then. So I charge tax to a customer who is exempt, either exempt in the US or maybe on the international, with B2B and reverse charge and so on. How do you kind of think about that in terms of cleaning that situation up where, you charge tax to a customer that shouldn't have been, they have an exemption reason?
I think in some ways there's some parallels to the situation, Because in one sense, it's not going to be refunding in case of a canceled order, but to some degree, we want to refund that tax amount collected to the customer in a situation where they were exempt, for example. And then the other piece of that is also trying to work with the state for some type of credit or amended return to show that tax was collected in a situation when it shouldn't have been. So overall, I think from a high level, it operates as a fairly similar scenario. There's just a little bit more nuance involved based on it not being a return that was canceled out, but a sale that actually went through. Just sales tax was applied or charged when it shouldn't have been.
Yeah, totally. And you think about also like the buyer, if they say they're exempt in the US, you need that exemption certificate. And in Europe, you need to validate the VAT ID number. So, and I know there's different ways to do that. So that's an interesting point. So let's get into quote to cash. This is one of my, I'm going to come back to the other Jonathan W here. Quote to cash, you know, I love talking about it. It's John, you're on the solutions architect side. Your customers are selling in multiple channels. They have different components around direct sales, maybe reselling, all these things. Kind of how do you coach them, or how do you think about bringing it all together, right? From a quote to cash perspective, what do they need to be thinking about to be successful in these situations?
Yeah, a great question. And really, when I come into a conversation, it's really diving deep into that quote to cash process. So, like, what are your sales channels? And then, right, usually you hear self-serve and sales led, and you have your reseller channel, you have marketplace sales. Really understanding all those points is key in sales tax, because it's never in a silo of how you're going to report this, because again, you need to get all your reporting together in one spot. And so when I'm talking to a user, I try to identify all the places that they're selling. And then two, on where you are selling, how and or do you need to calculate tax, right? If you're selling on a marketplace, App Store is a good example. They're going to be calculating and reporting tax on your behalf. And then the question then leads, well, how do you get those marketplace transactions into your sales tax reports if you need to? And then, are you selling on another platform? Stripe is obviously a platform that you can sell on. Any other, do you have an ERP that you're selling on your sales lead? Are you generating and building invoices out of there, or quotes that you need a tax calculation on? Are you using Salesforce, right? Do you want tax to be on, right? So these are all a litany of questions that we'll be going through with the user, and then diagram those out. And then be thinking, hey, when do I need to make that tax calculation call to add tax to a preview on a checkout, to a quote, to an invoice, these different points. And then what is that stage of when you want to report it, right? So it should be, so Stripe is accrual basis. So whenever that invoice is generated, it's going to show up in your Stripe tax reports. It's not going to look at the payment status. I think that's really good to know on how it works with Stripe billing. And so understanding how that works and how that's going to flow into the report is really important. And then I think mentioning tax ID and exempt customers, right? It's like, sometimes you don't find out that customer's exempt until they short pay that invoice. So, how are you trying to mitigate that risk so then you do not have to void invoices and then reissue them, right? How can I maybe self-serve better? And I'm always looking better, or looking to ways to improve that process. My experience though with SaaS is exemptions don't come up typically too often unless you're specializing in selling to nonprofits on that is, or education institutions. So it doesn't come up as much. I think when you get into manufacturing, that's when I'd work with users with 50,000 plus exemption certificates, and that's when you really want to automate it. But if it's one a month, I think you should look at maybe not boiling the ocean to solve that problem. So again, it's that phased approach of how can I get the biggest wins first, and then as I optimize my tax integration through these different sales channels to get the reporting right is how you should be really approaching it.
Yeah, and you talked about the marketplaces like Google, Apple, things like that, and do a lot of digital sales. What's interesting there is you're not responsible for emitting the sales tax, but you're supposed to report it. But I will tell you, some of these marketplaces provide really minimal data sets that don't let you to report it accurately. And so that's a real challenge right now if you're selling on Google, Apple, and some of these other ones where the data sets are, here's your revenue. And there's not a lot because they're stripping out all the PII and things like that. So it's interesting, from a reporting perspective there. I did want to touch on the whole quote to cash thing. So Zamp as an early stage company, right? We use Stripe, and our customers in the states where we have Nexus, and where SaaS is taxable, get taxed on their invoice. But on the quoting, we haven't built in any sales tax calculation function yet. And I'm realizing we need it, because we've had customers that said, hey, Matt, geez, we signed up for your service. What's this extra 7 or 8%? Well, that's sales tax. Well, it would have been nice to know about it when you quoted me. And it's like, well, sorry about that. But even if we didn't charge you, you'd have to report it to the state as use tax. So the point is that you have, I think, looking at true cost, when you're talking about 7, 8, 10%, I think it's really valuable to invest in some type of a calculation option within your CRM system so customers see that true cost when you quote them. I mean, we are a sales tax company, right? I think we should build that into our process. Early stage, again, it's on the list of to-dos, but it's something I'm sure you hear about as well, John, too. So
yeah, just to add to that, I think it's that phased approach, right? Like, it is, I think, nice to have, and to that point, you can always tell the story of you're gonna have to remit that tax somehow. But it's, again, hey, that's a good point to have a user experience if they generate a PO, right? And the taxes don't match on the PO and the invoice, right? That also just creates time to support that customer, and just kind of causes some frustration, I think, on both sides, the customer and also your internal teams, to have to answer those questions.
Totally. So one other question, I know with Stripe, you guys work with a lot of early stage companies, mature SaaS digital companies. What are the common problems you're seeing today from them? And then what's the impact of some of these problems? And then, any advice you can provide?
Yeah, I think the biggest
and don't
one
hold back
is,
here, John. Don't hold back.
yeah, I know it's tough. I think the biggest one is, like, it's so funny talking to a US company selling it outside the US. They're like, oh my, that's so confusing. And then you talk to somebody in Europe, and they're like, oh, that's so easy. Sales tax is so confusing. And so it's just like the mystery of it, of it being unfamiliar. And I think with that, it's like you're not going to be an expert in tax typically outside your, like, home. I call them something like a home jurisdiction, or your home location on that. And so that mystery is like a fear, right? Because you don't know what it is, what's really needed. And so that's why I think, again, just like relying on the partner, or a partner, could be, you're paying for a tax consultant, it could be your tax provider service, to really help open the doors for you on, hey, this is what you should actually be focused on. Don't worry about this stuff. Actually, this is what we see as a bigger issue. And I think when selling international, the biggest thing I think is, like, tax ID collection is a huge one, is making sure you're collecting that tax ID, especially like in B2B sales, especially. I think two, the other one is like the reporting piece, just goes hand in hand. And I think a lot of, Nicole mentioned the US, but it's happening internationally too, just the changes that are occurring, and being up to speed on those changes, and working with a partner on identifying those. At Stripe, we're looking to support around 100 countries by the end of the year. But that list kind of changes on which ones we prioritize based on what that country is doing in terms of, is a remote seller actually obligated to pay tax or not? And I think that's something that you should really look at outsourcing, and rely. And if you have any question on it, you should be reaching out to your tax partner to help answer that, because you're not going to be able to stay up to date on 100 different countries for tax. So again, I think, just like Echo, it is just find a trusted partner, right? And I don't recommend just shopping for the best price. I recommend finding a company that you have a connection with, that you feel like supported with, and that you can trust as you go into a very serious topic as compliance, and knowing somebody that's going to be able to answer your questions or at least help point you in the right direction on that. So I want to leave some time at the end. I could keep going all day for another hour, but
final word. I'm gonna leave for we like to call her the Beyonce of sales tax, Nicole. That's our nickname for her in Zamp, because she loves Beyonce, but she's, you know, she gets the final word. So you're a SaaS company, Nicole. You're non-compliant. You have sins of the past, right? I mean, there's a couple things you can do. One, you can put the head in the sand, right? That's one approach, and just hope it goes away. But what can you tell companies that are non-compliant? Like, you know, what do you recommend? What can you do?
I believe the most important thing is do not panic, right? Don't panic and make decisions. Breathe and do your research, right? Figure out what options there are out there for your company. Because if you panic and say you go and register, it takes a lot of your options off the table, right? There's options that you have before you register. There's options that you have after you register in certain states. I would say don't register until you're ready to be compliant. I know that's odd to say, but there are repercussions to registering and then not filing, right? So the states are getting quicker about noticing these things, and they start sending letters out to people that register and they don't file. And there are these estimated returns. And the numbers on those estimated returns are usually scarier than the reality of what you actually need to do to comply. So, you know, wait until you're
I've been scared from some of those numbers I've seen.
Exactly. Right.
Numbers. Yeah. Gosh.
Because on those estimated returns, right, you have to think, what are the states using to make those estimated returns? They don't have any of your information, right? Yet they have these numbers applied to the liability that you supposedly owe to the state. So do your due diligence for yourself and your company. And then truthfully, there's so much that people don't know about taxes. Find a trusted partner like Zamp and let us do the hard stuff for you. Like Zamp, even though we haven't been around that long, we have helped people dig themselves out of these kind of holes left and right. There are people there to help, and we are people to help you.
Awesome. That's awesome. Thank you. Great response. I guess we have some time for Q&A. And I also want to give a shout out to Maya Rector, who's here behind the scenes on this session. Maya's from our marketing team at Zamp, and she's done a great job pulling this all together. So thanks, Maya. But if we have any questions from the audience here, we'll take a couple minutes here and field those if you want to post any in the Q&A section. John, can you can sing a little bit right here while we're waiting? Or Pritesh, maybe you can jump in here. Some elevator music.
I mean, that's one way of getting people to dial out.
Yeah, exactly.
Maybe sing.
I don't see any questions, unless I'm missing something here. I don't see anything coming through in the Q&A. I'll give it another minute, and then we can sign off here. Oh, here's one. All right. How do you get customized reports with Stripe's sales tax? John or Jonathan?
John, do you want to start on that one, or do you want me to?
Jonathan, you can take that.
Okay. So I think when I work with people who want to find specific data, it's first is like, hey, what are you trying to accomplish? I think that's the biggest thing with Stripe. We're going to have a lot of different data within Stripe, with being a billing platform, being a payments provider, right? And each one of those reports has a different purpose. So then if you want or need something really specific, we have our, out of the back, I always recommend starting with the out of the box reports. And those reports actually can be augmented with additional information. The information can include what we call metadata, which is just, kind of customized data that you can tag to different, invoices or tax transactions to be included in that Stripe tax report. I've seen like customer IDs added from, internal systems. I've seen different, credit memo IDs from a different system, just to be flagged to help with that reconciliation process. And two of those reports are summarized, which is more high level, than itemized, which is very specific, right? Includes invoice, sorted by invoice, and then also breaks it down by line item and also jurisdiction. If you need even more custom, right, there's really two main options. It's Sigma, which is our custom reporting tool. And then there's also SDP, which is Stripe Data Pipeline. So Sigma is a SQL reporting system, but we actually have it so you can write just native language and ask for reports. We have some templates in there, and then you can kind of customize those templates either just through writing, a sentence saying, hey, I want to see my sales tax collected last month, right? And it'll come up with that report and show that information for you. And then with SDP, so again, Stripe Data Pipeline, that's if you have a data lake or a data warehouse, we can connect that and push that information into it. And you could, again, join that with other information you have in your data lake or data warehouse to create an even more custom compiled report. So I think, again, it comes down to like, hey, what are you really looking for? And is just to make sure tax is the right report. A common question I get is historical tax reports. Just know, like, we don't necessarily go back in time and say, hey, here's like the tax you should have collected the last 3 years. That is not available in Stripe, just to be clear. So it would be available through maybe somebody else. I don't know if Zamp does that, or but we usually refer it to somebody else who would be able to provide those kind of historical reports.
Yeah, that's a good answer. We also have some customers that will export data and create their own kind of views that they like to see outside. We don't want to ever take spreadsheets away from people. And so sometimes they're, again, using the export function and then using functions they built in with their spreadsheets to, support a lot of the views and logic they need. So another question we got here is sourcing. So how do we determine what the source of the taxing location is for software? For example, since SaaS is being used all over the place, is the bill to address the best option?
Man, I can jump in here.
Yeah, go for it, Joe.
So I think this question comes up a lot for us. And generally, we see the location that a sale of software sourced to is going to be where it's first delivered or accessed. And because we're not dealing with a tangible physical product here, there's not a shipping address that's evolved. So typically this ends up being the billing address. Where this can get tricky is oftentimes software is going to be accessed from more than one location at a time. This is called multiple points of use. And there are some states that have had exemptions for purchases of digital products that are used concurrently within and outside of a state. But what happens, and especially with some early stage companies like we talked about, there isn't really a capacity to track that use across all the different locations a software is used, and then to actually look at assessing tax that way. So as a result, common practice really does oftentimes end up being using that bill to address, as it's a reasonable attempt at staying compliant. So I think when we look at like the letter of the law to a T, maybe it's not the best option, but it's become the norm based on, again, some reasonable or realistic way to apply this in a real world situation.
Yeah, that's a great answer. One other thing I'll add to that is on the physical product side, when you get into sourcing, you start talking about origin, destination rules, and states like Texas, if you're shipping physical product, the tax is based on the ship from or origin address. But when you get into things like SaaS, it's always based on where the software is consumed, or to John's point, the bill to. So you're never going to apply an origin rule to any type of software, SaaS, for example, that you sell. It's always going to be based on where the service is consumed. And that's, I think, where the build to becomes a logical place to leverage for if you're a SaaS provider. Great. So I don't see any other questions. I really want to thank the panel today. Really informative. I learned a lot here today as well. I wrote down a couple things here that I learned. So thanks everyone for sharing all of this feedback and information. I also will say, we're going to be planning to do more of these. I think about sales tax space in one where it is complex. It changes all the time. And Nicole talked about like the states all coming together, right? And I think there's been a push towards simplicity, but it just really hasn't happened. And it's to be determined when and if it will ever happen in terms of simplicity on rates, rules, sourcing rules, et cetera, across all these states, reporting, nexus triggers. But I do think that, taking this kind of chaos and really getting on a global perspective as well, but bringing transparency and education is really what we're going to continue to focus on. And there's so many topics we can talk about. This again was really helpful. So thanks everyone from Stripe. Thanks Pritesh from OpenAI. Thanks Nicole and thanks Maya for setting this up. So have a great day, and hopefully this was helpful for everyone.
Thanks everyone.
Take care, everyone.